What's up, Crypto Degens? It's your go-to source for all things crypto, Crypto B, back at it again with another deep dive. This time we're unpacking a hot topic that's been lighting up the comment section, Bitcoin's Tense Standoff, $91 target amidst rate-cut bets. You asked, so you shall receive. Let's dive right in and dissect what this means for you, the young, meme-loving, and risk-tolerant investors out there. So what's the big deal here? Why is everyone buzzing about Bitcoin's potential rally to $91, and what does this have to do with rate cuts? In the next 5 minutes, we're peeling back the layers of this complex scenario, so strap in. Let's set the stage. Central banks around the globe, particularly the Federal Reserve, are in a constant battle with inflation and economic growth. Their primary weapon, interest rates. When they slash rates, borrowing becomes cheaper, potentially heating up spending and investment, but also fueling inflation. Conversely, hiking rates can cool down an overheated economy, but at the risk of stifling growth. Now, investors are betting on rate cuts, a move that historically juices up risk assets, including our beloved Bitcoin. Diving deeper, Bitcoin, the king of crypto, has always had a bit of a love-hate relationship with macroeconomic indicators. But here's the kicker. Rate cuts could mean a weaker dollar, and historically, when the dollar weakens, Bitcoin shines. It's like the digital gold narrative on steroids. But why $91K, you ask? This target isn't just pulled from thin air. It's based on historical data, technical analysis, and a bit of that crypto magic, speculative sentiment. Let's break it down. Bitcoin's price movements are often a dance between investor sentiment and fundamental economic indicators. With whispers of rate cuts, investors are eyeing an environment where low interest rates could decrease the opportunity cost of holding non-yield assets like Bitcoin. More simply, if you're not making much from savings or bonds, why not roll the dice on Bitcoin, especially if inflation makes holding cash less appealing? But here's where it gets spicy. The crypto market is notoriously volatile, and while the wind seems to be blowing in favor of a bull run, external shocks, regulatory news, or even shifts in investor sentiment can flip the script overnight. Plus, let's not forget about the halving events, periodic slashes in Bitcoin rewards that historically precede significant price rallies. If a rate cut coincides with the next halving, strap in for a wild ride. Why should you, the crypto degen, care? It's not just about the potential to moon. Understanding these macroeconomic triggers gives you a clearer playbook. It's about risk management, market psychology, and timing your moves with a bit more finesse. Whether you're hodling, trading, or just watching from the sidelines, knowing the landscape helps you make informed decisions. So, could Bitcoin really hit $91K? If the dominoes fall just right, rate cuts, weakening dollar, bullish investor sentiment, and a sprinkle of crypto-specific catalysts, it's within the realm of possibility. But remember, with high potential returns comes high risk. Never invest more than you can afford to lose. Bringing it home with some real-world examples. Remember when Bitcoin broke past $20K in 2017 and then again in 2020? Those were periods marked by economic uncertainty, rate cuts, and a flocking to digital gold. Each time, skeptics doubted, and yet Bitcoin defied expectations. We're in another one of those critical junctures, and history, while not a perfect predictor, often rhymes. Wrapping up 15, this deep dive into Bitcoin's standoff amidst rate-cut bets was powered by your curiosity. Keep those comments coming, and let us know what topics you're dying to see next. We're here every day, breaking down the complex world of crypto, one deep dive at a time. Until tomorrow, stay savvy, stay degen.